Joining us now to talk more about the markets and stocks, Chris Verrone, Strategas Research Partners, Head of Technical and Macro Research. We should note that Strategas is a Baird company. Chris, great to have you with us.
Great to be here.
I want to talk about one of the biggest stocks, and that would be Alphabet. And you flag it because it closed below its 50-day moving average for the first time yesterday since March. How important is that?
I think it's notable the last couple of weeks. There's these little hints of subtle leadership change among us. We see it with Alphabet a little bit softer the last 2 or 3 weeks. Amazon a touch softer. Even Apple has come in here a little bit. So if you kind of plot this as a ratio, the triple Q is actually losing some share or ceding some ground to the average stock, the equal weight S&P. So I think there's a little bit of a subtle change. My suspicion is rates are driving this. You know, we have yields hovering around 4%. We think they go higher from here, and I think that's manifesting itself with these little hints of leadership changes. I suspect these may become bigger stories as the second half of the year plays forward.
In terms of the rates picture, though, we did cross those key thresholds of 5% on the 2-year and 4% on the 10-year, and we gave them up. So what makes you think they move higher?
Well, let's just think about the paradox here for a moment. It was a year ago to the day we printed 9 on CPI. And here we are in 25 minutes about to print 3. What have yields done over that 12-month period? They're actually higher. Right? So you have 600 basis points of headline CPI lower, and yields have gone 3.25 back to 4. Our big call this year has been yields will be right-hand sticky, and I still think they're very right-hand sticky here. You know, pushing up through 385, 390 was a very big breakout on 10. I think we're consolidating these here, but ultimately 4.25, maybe 440, 450 is where we like 10s here. But also just think about the paradox here of, you know, when did the energy sector peak last year? It peaked when CPI printed 9. What's happened the last few weeks here? Energy stocks showing some signs of life. So this market right now is full of all these great paradoxes. And I think yields and energy are both coming to life here. Very important implications for second half.
Yeah, particularly for services, right, on oil?
Absolutely. Yeah. If you look at the service expiration ratio, the service names have really turned. And just look at the names. Schlumberger, really important breakout over the last several days. Halliburton, Baker Hughes, Champion. So this move to services, I think, is important. And quietly, I mean, they've had Brent oil down to $70 6 times over the last 4 or 5 months. They can't kill it. They can't kill it. Brent back above the 50-day, I think, is important here.
Yeah, all those technical things. I don't know whether you watched, but Jeff Curry yesterday, I mean, he tells me things about just commodities in general, just underinvestment across the board. I don't know what that means, but we're going to be using a lot of this stuff for years and years and years, and you just don't flip a switch and replace it.
I think, Joe, in this business, it's so easy to lose the plot amid the noise of the daily data, right? The last 2 years, it really looked like the world was changing with rates and with energy and commodities. And then you look at the first 6 months of 2023, and everything suddenly goes back to the old way of tech. And I'd be careful with that. I think when you look at what's happened the last 2 years, I mean, we have turned a 40-year cycle in bond yields. That is a very meaningful move. And I think the leadership implications of this over the next number of years are still to be found out. You know, one of the things I really like here, and we've talked a lot about this, is the industrials. I mean, these are names that remind me of what tech looked like in 2012, 2013.
Yeah, record high yesterday. You see more room to run to the upside.